Australia is, on paper, one of the wealthiest nations in the world. It offers a high standard of living, strong personal wealth figures, decent work-life balance, and broad access to public services like healthcare and education. Remarkably, it has also maintained relatively even wealth distribution, on par with countries like Japan, which enforces strict economic controls, and Iceland, where wealth is spread among a small population. But beneath this stable image lie serious vulnerabilities. The economy leans heavily on a narrow range of sectors, especially raw resource exports. The same kinds of industries that have triggered economic trouble elsewhere when global conditions shift. Adding to this risk is Australia's unusual geopolitical position, closely aligned with the United States politically and militarily, yet deeply tied to China economically. As tensions rise between these global powers, Australia stands exposed. These external risks are concerning, but they also make it harder to address long-standing domestic issues. Many of these have been kept in check by short-term economic performance, not by real solutions. A prime example is the housing market. It has defied expectations for years, but its continued growth may be deepening the eventual crash. Still, it's important to recognize the country's underlying strengths. Australia maintains one of the largest trade surpluses in the world, driven by a steady demand for its natural resources, its education sector, and, increasingly, global cultural exports. Which leaves the real questions: how long can this model hold? And can Australia adapt before the pressure becomes too much? Just as some individuals get rich through luck and end up worse off in the long run, it's possible to argue that Australia has followed a similar path. Natural resource wealth can be a lot like winning the lottery, a massive opportunity, but also a potential trap. It can make other industries seem less worthwhile, since it's easier and more profitable in the short term to just cash in on what's already in the ground. Australia hasn't entirely escaped this dynamic. Its export economy is one of the least diversified in the developed world, dominated by raw materials and agricultural goods, often sent overseas without any refining or value-added processing. That leaves a huge part of the economy vulnerable to fluctuations in global commodity prices and trade agreements, many of which are becoming less stable. Australia's direct trade with the U.S. is relatively small, and it imports more from America than it exports. But a global shift toward protectionism still poses a serious risk, and there are other warning signs. Coal, Australia's second-largest export, is seeing flatlining demand, not just due to environmental concerns, but because cleaner and cheaper alternatives are becoming viable. Heavy reliance on natural resources also brings other risks, especially around corruption and mismanagement. While Australia's strong institutions have helped maintain stability and prosperity, even they're not beyond criticism. For one, the country has struggled to effectively tax its resource wealth. Efforts to implement fairer systems, like resource rent taxes, have often failed due to industry lobbying. In some cases, it's gone the other way entirely. Rather than collecting revenue, the government has started subsidizing extraction. In 2024 alone, nearly $15 billion in subsidies and tax breaks were given to the natural gas industry. In fact, according to the 2025 federal budget, fossil fuel subsidies have increased further, with new allocations directed toward expanding LNG infrastructure. The justification is often that this helps lower domestic energy prices, but in practice, Australia has ended up re-importing its own gas at higher costs. It's a paradoxical outcome, and a sign that even with immense natural advantages, poor policy can still get in the way of long-term benefit. Housing remains one of Australia's most pressing and persistent problems. In cities like Sydney and Melbourne, real estate prices are among the highest in the world. As of 2024, Sydney ranks as the second most unaffordable housing market globally, with median home prices now exceeding AUD 1.6 million. Several factors have contributed to this situation, and unfortunately, not much has been done to truly reverse the trend. Australia's appeal as a multicultural, high-income nation with a good quality of life has made it an attractive destination for migrants. Many new arrivals are working professionals seeking better opportunities, and they need places to live. But a significant portion of the demand also comes from wealthy individuals moving from other high-income countries, drawn to Australia's reputation for livability. In response to this demand pressure, the government introduced a 2-year ban on foreign home purchases. The ban doesn't apply to people on residency or student visas, which is where most of the housing demand from new arrivals is actually coming from. There's also a broader issue linked to Australia's economy, the importance of service exports. While the country's goods exports are heavily concentrated in raw materials, service exports, like tourism, education, and even digital content, make up roughly a third of total exports. These are harder to visualize than goods being shipped overseas, but they bring in foreign income. International education, in particular, has become a major industry. Students coming to Australia pay high tuition fees, rent local housing, and spend in the economy, all of which technically counts as export revenue. However, this sector has also become a pathway for people seeking residency or access to the job and housing markets, not necessarily education itself. While the government has cracked down on fraudulent institutions, known as diploma mills, and in just the past year, over 35 education providers have lost their registration under new TEXA oversight policies. Even legitimate universities are financially dependent on international enrollments. That means policies like the foreign buyer ban are often more symbolic than effective, as the real source of demand is largely unaffected. The end result is a housing market that continues to inflate, supported by immigration policies, education exports, and ongoing demand, while serious affordability issues for residents remain unresolved. Australian real estate is seen as a highly desirable global investment, but several local factors have made the housing situation increasingly difficult for average Australians. Tax policies play a big role. Incentives like negative gearing and capital gains tax discounts strongly favor property investors. For high-income earners, owning one or more investment properties is not just common, it's almost expected, and these purchases are often made with large amounts of debt. As a result, while government debt remains modest, household debt in Australia is among the highest in the world, second only to Switzerland. This debt burden isn't driven by complex financial strategies. It's often just the price of trying to own a home. Renters also face rising costs, making homeownership seem like the only path to long-term financial stability. Mortgage repayments, despite interest rate fluctuations, are often more predictable than rent. Plus, homeownership is seen as essential for retirement planning. Without a paid-off home, retirees would need much higher incomes just to keep up with living costs. Yet despite these pressures, most government efforts have focused on helping people buy homes through grants and tax breaks, rather than reducing the cost of housing itself. This often ends up inflating prices further, as more purchasing power simply bids up property values. On the income side, Australia does have high minimum wages and strong labor protections. But at the upper end of the income scale, where major asset bubbles are typically fueled, it doesn't attract the same concentration of ultra-high earners seen in cities like New York or London. So the demand isn't driven by elite salaries, but by other systemic factors: tax policy, immigration, and the pressure to secure housing as a form of financial security. There's also a deep imbalance in supply. While Australia has plenty of land, most people want to live in a few major urban centers, where housing is the most expensive. Urban sprawl, restrictive zoning laws, and resistance to higher density development limit how much new housing can be built. Home ownership is high in Australia, and many existing owners view their homes as financial assets. That makes people reluctant to support policies that might lower property values, even if they don't plan to sell. Meanwhile, state governments rely heavily on revenue from stamp duty, a fee of up to 6.5% paid on every property sale. This makes states dependent on high property prices and creates a disincentive to make housing more affordable or allow easier buying and selling. Even when people want to move, like older couples downsizing, the high transaction costs discourage them. That keeps larger homes off the market, limiting supply for growing families. Construction itself is also expensive. Australia's high wages and limited pool of skilled tradespeople drive up costs. Many workers are drawn to higher-paying jobs in the mining sector, which competes directly with the housing industry for labor. In short, a mix of tax incentives, debt dependence, poor supply planning, and political interests have all contributed to a housing market that's increasingly out of reach for many and difficult to reform. None of these challenges are unique to Australia, but few countries experience all of them in combination to this extent. Despite all these problems, it's important to look at them in context, because part of the reason things have gotten so difficult in Australia is that the country has a lot going for it. One major strength is wealth equality. While Australia doesn't stand out for income equality, especially compared to similar nations like Canada, it performs significantly better when it comes to the distribution of wealth. In fact, it's among the most equal developed countries in that regard, just behind nations like Slovenia, Iceland, and Belgium, which have stronger social welfare systems and smaller populations. What makes this particularly interesting is that Australia has no inheritance tax, unlike countries such as Japan, which use it to prevent generational wealth from snowballing. Normally, high income inequality would lead to high wealth inequality. Those earning more can save and invest more, widening the gap over time. But that pattern hasn't played out to the same extent in Australia. This is partly because wealth is often tied up in home ownership, which is relatively widespread. In addition, the superannuation system, a mandatory retirement savings program, ensures that most workers are building up some form of long-term wealth, helping to raise the baseline. However, these advantages hide a different kind of inequality, intergenerational disparity. Older Australians who entered the housing market when prices were far lower now benefit from enormous home equity. Meanwhile, younger Australians face much higher property prices and heavier tax burdens. A recent study found that a working-age individual earning AUD 100,000 pays around 2.5 times more in taxes than a retiree earning the same amount. This disparity has contributed to rising frustration, especially among younger people trying to enter the housing market or save for the future. The encouraging part is that Australia has the tools to address these challenges. The institutions, policy levers, and economic capacity are all in place. The real question is, why hasn't meaningful action been taken yet? With a major election approaching, political leaders are promising solutions. But many of the underlying problems are tied to policies that neither side seems eager to change. For a deeper look at that political angle, check out the video on the Geopolitics channel, Context Matters. Thanks for watching. See you next time.